Meantime, crypto markets have been taking a slight hit this week after the enthusiasm on new Bitcoin ETFs has slowed down a bit. Our next guest is from one of the fastest growing crypto platforms, and today he is launching globally. Joining us right now to discuss all of this is Chris Marslick. He is the co-founder and CEO of Crypto.com. Chris, good morning to you. It's nice to see you. We're all trying to figure out where we are in this moment. We saw Bitcoin, of course, go on this run ahead of these futures ETFs. Now there's some new questions about a new futures leveraged ETF that the SEC seems to be pushing back on. We had the Robinhood news this week about their crypto platform and not producing the revenue that some people expected. Is this a lull in a moment? Where are we?
First of all, thanks for having me. Happy to be here. I couldn't disagree more strongly. We just saw our record numbers on majority of KPIs yesterday. The market remains super strong, both on retail side, and we see an increased institutional adoption. So we expect a very strong Q4. In terms of business performance in Q3, we did not see as strong of a drop-off as you could see from Robinhood's results. So it also proves that it pays to be specialized and offer a tailored crypto offering for a global community.
So you think actually the Robinhood issue is its own issue?
Well, I think that they have a pretty limited offering. So if you want to get into crypto, and no matter what's your level of interest, if you're crypto curious or crypto serious, Crypto.com has an entire ecosystem built out. We support more than 50 blockchains, almost 200 digital assets. It's an entire ecosystem. And companies who don't specialize just can't keep up with the pace of innovation in cryptocurrency space. So I recommend everyone to look for platforms that are dedicated to crypto.
How do you think investors should think about these new ETF products, either investing them directly or what you think the impact ultimately is going to be on the price of crypto or Bitcoin in this case, for example?
Well, it's obviously a fantastic milestone that we've got the ETFs, but these are not the ideal products because it doesn't connect directly to spot markets. It's just an interim step. But again, you're seeing these proof points along a journey of broad institutional adoptions. You've got massive names coming out every week, and we talk to a lot of people in the industry who are less public about their involvement, but they are buying digital assets and treating this asset class as something they want to be deeply involved with. So I'm super bullish on both for the institutional adoption and the retail potential here.
The ECB, which we just mentioned, it's related in some ways to Bitcoin in terms of just the central banks printing money. In terms of where you think Bitcoin is headed as an actual either investment or currency, some people think we're $100,000 at the end of the year, which would, give us 2 months. Others think we're at $500,000 if you're Kathy Woods, but others think we're half this.
Right. I tend to stay away from giving price predictions, but I think it's undeniable that Bitcoin's positioning as a store of value and an alternative to gold, it's very, very strong and widely accepted. So there will be volatility, of course. It may go up, it may go down, but you would be hard pressed to find a better asset to hold as a portion of your portfolio, regardless of whether you're an institutional or retail investor.
Shepard Smith here. Thanks for watching CNBC on YouTube.